Welcome back. As promised, let's get straight to the management of Quess Corp. We have with us the Group CFO, Mr. Kamal Pal Hoda, as well as the Group CEO, Mr. Guruprasad Srinivasan. Hi, gentlemen. Good morning. Thanks a lot for joining in. Well, congratulations. It appears that growth is accelerating because you have clocked around 14% on a year-on-year basis, which is better than what you did in the first half of the year. Could you tell us how quarter four is looking like? Can you continue to maintain this mid-teens growth? That's point number one. And also give us some rationale why margins dipped a little bit. Operating leverage should play out, right?
Yeah, very good morning, Nigel. Thanks for having us on this show. Yes, Q3, we did deliver a good set of results. And just to give, despite of headwinds being specifically on few segments, that is BFSI and early dehiring post-Diwali season, despite of that, we are able to deliver a good result. Couple of indicators. By headcount, for a period of 9 months from April to December, we have added a net count of, a total headcount of about 50,000 net adds. And whereas against compared to the previous year, full year, we would have added about 56,000. So from that standpoint, we still have a headroom, left in Q4. Coming back specific to the margin question that you had, there are a few, specific indicators. First and foremost, we are investing in leadership for the season, and specifically we are getting into verticalization, and it needs more investment on the leadership and strengthening each of the platform. Second, of course, there is a macroeconomic issue hitting us in our international geography, specifically from Singapore, which is slowing down, which is also a high margin business, impacting overall a few basis point on our EBITDA percentage. And of course, IT services being not coming back into shape completely, we are largely focusing on GCCs and other sectors. So these are few indicators as to why margin has taken, but it is still, I would still say this is an interim dip, but we will be able to regain this as we get end of Q4.
Just a couple of quick numbers. The headcount, as you said, I think it's 50,000 that you've done in the first 9 months. Last year you did 56,000. So this year, what do you end up with? What does it mean in terms of growth? And also in the past, you've done margins of 5% as well. Are you headed in that direction? That, in the coming quarters, you'll get back to around that 5% margin band?
See, look, few specific indicators that we'll have to keep in mind. The GDP is heading towards its low in last 7 quarters, and it is going to impact on the consumption pattern. And most of our resources whom we deploy are frontline staffs, right? So it has a cascading effect. So from that standpoint, we are mindful that Q4 still will be slightly muted. While we might we have open mandate worth of about, equivalent about 14,000 open mandates as we step into the last week of January. But however, it's a bit wait and watch. With regard to the overall growth, I think we should still, by revenue, we will still end the year at a double-digit revenue growth and a double-digit EBITDA growth.
Okay, got it. All right. Are you looking to up the contribution, though, of IT staffing as well as international staffing, which have relatively higher margins? I want to also ask you, will Trump's policies impact your international staffing business?
It should. It is a bit early at the moment. As I said, Singapore is going through its own challenge, which is we are the largest IT staffing company in Singapore. We are seeing good traction coming in from Malaysia and Philippines. Middle East is doing well for us. Middle East, we do a combination of both IT staffing and the general staffing there. So IT staffing is picking up well there. These geographies definitely yes. But however, India is still our largest focus. 67% of our open mandate comes from the GCCs. So GCCs is seeming to be the captive centers that are being set up are quite promising, and we are seeing good traction coming in. With regard to US policy, of course, the largest IT spend, the IT market is US. I'm sure, I think, as and when the policies are getting firmed up, I'm sure it will have a positive impact on overall IT staffing, both for India as well as the US market for us.
Okay, all right. Let's wind this down then, and let's get a comment coming from Mr. Hoda. Thanks, sir, for waiting by patiently. If you could tell us what is the timelines for the demerger, and also I wanted your comment. DeepSeek seems to have, pulled stock markets down, and there's plenty of debate out there. How do you see it impact your business?
Yeah, thanks, Nigel. And on demerger, we are pretty much on track. This is an important quarter for us, quarter four, wherein we expect the final regulatory approval, which is the second motion at NCLT. We are hopeful that we should be able to get a favorable order from NCLT in this quarter, which means that we're all geared up for seeing the three separate listed companies by Q1 of next financial year. Just to remind everybody, this is a mirror shareholding, so we are splitting the company into three parts. So the staffing remains with Quess, and we're creating two large companies, Blue Spring and Digitide, in their respective verticals. So we are hopeful that Q4 the demerger should get completed with the NCLT second motion application, and to have these companies listed in Q1 next financial year. On AI, there are considerable amount of things that we are doing, especially in our GTS vertical, where we are, amongst the top two players in the voice, and we are looking at various AI offerings, both to our customers to, improve the productivity for the customers, the productivity also for our callers, and there is a significant investment that we have done, and we believe that AI will have a transformation to this industry, and we've taken our early steps by investing in some of the AI offerings for the customers.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for being with us and giving us some sense on the business today, that is Quess Corp.